Good morning. It's Jonathan Barratt with the week ahead report for Monday, August the 30th. The current time is 8:01. Okay, with this week ahead, before we get into it, let's look at what happened on Friday. Obviously, we've got a little bit of news out of Jackson Hole concerning what was occurring with the economy and also how the likes of Ben Bernanke decided he would portray or certainly help the economy. Quite encouraging signs. And as a result of that, the market took on itself to be quite aggressive. That's particularly to the top side. So that was quite good. So let's have a quick look as to what's happened there. Okay, the Dow was up 1.65%, which was pretty positive. The S&P was up 17. The Nasdaq was up 34. The FTSE was up 45, quite solid. The CAC was up 32. The DAX was up 38. So quite good on that front. Looking at the stocks, looking at the futures, the local market was up 41, 43.89. So that in itself, I think, is quite a positive outcome. And I think we all really expected that Bernanke was going to say something concerning how he would support the economy, because he really had no other choice. As a result of that, we saw dollar come under slight pressure across the board, except for the dollar yen. And we saw obviously the Aussie trade higher and some of the commodities. So let's go and have a look at a few things so we could get the week intact. Okay, let's first of all start off with the dollar index, 82.76. And on the hourly basis there, we saw the dollar come under pressure. It's just coming up now. There it is there. As you can see, a lot of volatility but under pressure here. I think if it breaks through that 82.50 level, then I think the trend will continue. Just have a look at the daily chart there. Let's try and get that daily. No, it doesn't seem to be happening at the moment. So just stay with us on that. That was that bloke. So let's. Yeah, we'll stick to the 2 hours. Okay, so as you can see, with the dollar index, it's under a little bit of pressure. And there it is there. If it breaks to that area, then down it comes. Things look a little bit weak at the moment for it. Now, that should support the likes that it did some of the commodities. Crude, 75.37, quite a strong move off those lows. And as you can see, it cements that range, US 70.71, the downside targets for it. But as you can see, quite a volatile move there to the top side. Now that itself cements the range. Top side here, 82.30 or 83. Downside there with that low which we saw, which was 70.76. That did satisfy a few targets that we had, and given the volatility, probably expect it now to be in that range, and probably expect it to just trade sideways for a little bit more. Now that also affected copper. Copper was up also. 341. Now I like this. Now remember, copper's only about 15% off its major highs, so that in itself is quite interesting because it seems to weather things quite nicely. And as you can see, break it out through that top side there, in my mind, suggests that copper can go and can continue to go. So quite a positive move on that front. Gold obviously back a little bit, even though we did have that weak dollar. Gold back a little bit, just purely as people think that there is less risk aversion out there. But there it is, bubbling around at the top here. And obviously a breakthrough here probably sends it a little bit lower, but let's see what happens on that. The Aussie battler did very well at 90.57, and that's looking quite strong indeed. And that also cements this range that we've had. 88's been the low there, and 90 is the high. Probably expect to come back a little bit before going onwards and upwards. Euro, same kettle with same bag as the euro. 127.50 at the moment, and you can see there that obviously euro slightly further, dollar weaker. That seems to be the trade at the moment. Okay, so how's this affected the SPY? Okay, obviously the SPY, we've always known we've had areas 43.50, 43, 41.50. They're probably the main concerns we do have if the market broke through it. But as you can see, it's broken, it's held here. And looking to break back into the range. I expect that to be the range. for a while now, and probably expected to test back to this top side at 46, so 4,600. So if anything, they're relatively positive on that front. Now, because of what's happening with the chances of recovery, or the fact that the Fed will intervene in some way to support the recovery, probably put the likes of some of these other commodities under the spotlight. Soybeans, one we looked at, and we tried to get in on Friday night but just missed it. But we're still holding out to try and get in here. But soybeans in itself do look as if they're ready for a good run to the top side. So we actually do like that at the moment. And as you can see, a bit of a double, triple bottom down here, which was very good for us. And as you can see, back up to that 1040 is probably where I'd like to see it. If you are buying it on any dip, the stop must go in at 992 or below that previous low. So that's not a bad tip. I actually like that one in itself. Corn, same as for soybeans, been quite supported by seasonal factors and also obviously with a weaker dollar. And that itself sort of seems to be holding up okay. And don't mind that at all. Nearly broke through the top side. But out of all the grades, we actually felt soybeans were by far the cheapest. So I don't actually mind continue to look on that soybean trade. Okay, just looking at a quick, before we go, let's see what we've got coming out. There is quite a lot of data out this week, but the most important one is the unemployment in the States. And that's what I think you'll find the market will focus on. Now that's very important, obviously, because there's been a lot of moving and shaking, and people are using that as the litmus test for the recovery. That comes out on Friday, and I'll talk a little bit about it a little bit later. But we've got personal income out today in the States, which I think will be very important. We've also got Chicago PMI, consumer confidence on Tuesday. Then outside that, construction spending, and pending home sales, usual numbers out on Thursday. The all-important one is the unemployment in the US. Now, the non-farm payrolls change is meant to be down 100, and well, the range is down 180,000 is the consensus. That puts the rate at 9.6. That's a little bit higher than expected, and I think that to me will be quite interesting. I think the market will certainly focus on that this week. So really, that's about it for us for the week ahead report. The themes we're following at the moment, I guess the soybean theme, which we like. We think that US dollar is probably found a little bit that's firmed enough for a while and probably come under a little bit of sideways pricing pressure. Let's see what happens on that. Well, that's about it. Remember to tune into our tweets, Facebook, and also any of the emails, and also when we've got some of the seminars. So that's about it from me. Have a great week, and we'll talk to you later. Try to turn this off. I can't turn it off. No. Hang on. I can't turn this off. Where do you turn it off? Pete? The record button's gone. Peter? Yeah.
Just hit end meeting.
Where?
NDA, you got to file end meeting and then do the recording itself. Unless you just recorded it all.
I did.